All right, fantastic, Darrell. Thank you very much. Let's do a quick sound check and make sure that the equipment is working uh, good. Okay, fantastic. And oh, Pavlin had a good question. Welcome to the recorded webinar. I wish these were recorded. That would make our lives so much easier, but I always find that with the markets, you actually need to do this shit live. So that's what we're doing here. We're all at the office sitting here at 7 o'clock with you guys. And I always think with the markets that you know, if you're gonna do the markets, you're doing it in real time because there's stuff that's happening right now. So welcome to tonight's webinar, and it's actually you know, look, the summer Fibonacci series. So what is this, and you know, why is it important? And let's go through some examples and just kind of dive right in. And you know, it's interesting with Fibonacci, and there's a couple of things here. And Carolyn and I go way back. When I first started learning about trading, she was one of the first people I kind of looked up in terms of wanting to learn from. And so what's great right now is we're kind of doing a Fib series that kind of features her work and how different traders use it. So we're going to go and just kind of dive into this. And the one thing the one most consistent thing I've heard from traders who've gotten consistent, all right, and I know that's probably a confusing sentence, but of course, every trader that does this, you know, at some point you figure out it's like, okay, it's all about probabilities. You win some, you lose some, but at the end of the day, you want to get consistent. And that's the dream of all traders, is get consistent, because once you're consistent, you have choices, you know, freedom, quit your job, just get some extra income, et cetera, et cetera. But the most consistent thing I've heard from traders who are consistent is that they bring and incorporate Fibonacci work into their trading. All right. So first of all, if you're not utilizing it, you're missing out on a lot. And then secondly, if you are using it, there's some kind of cool things that you may or may not know about Fibonacci, especially like with timing and symmetry, that makes this a lot easier. So, so let's just kind of dive into this. So back when I was a young punk trader and I was learning how to kind of, you know, I'm trying to like grasp my trading knowledge, I would go to the trading expos and things like that. And so one of the people that I deliberately looked up was Carolyn. So Carolyn, who, you know, she's started off in the pits doing all kinds of stuff, and really finally came across a methodology that for her worked so well that she just discarded everything else and focuses on exclusively. Jim Cramer loves having her on the show in terms of, you know, people will be on there panicking and talking about the end of the world. And she's like, well, if you look right here, we got timing for a low. And I mean, she doesn't speak like that, but and then the market holds and rallies and everybody's like, oh my gosh. And so it's some really kind of very cool, simple, powerful stuff applied over and over again. And it's just important to know about it. And so the first time I had met Carolyn, I went to an expo. And when there's a traders expo, you know, there's a speaker on stage and they're sitting there and they're kind of talking to everybody. And then, you know, where everybody else is out here in the audience. And I was out in the audience and she said something and I raised my hand and I was like, she's like, yeah, what do you want? And I was like, hey, hi, Miss Broden. You know, how do you know which level when the market's pulling back, which one's going to hold? And it was funny because she just kind of rolled her eyes. She's like, dude, have you been listening to what I've been saying? And she just kept on going. And so that's Carolyn, and I think it's great. She is, you know, extremely passionate about her work and does not suffer fools lightly. And I think that's great about her. You don't remember that, Carolyn? No, it was like before. It was before we actually knew each other. I was actually in one of your talks, and it was pretty funny. All right, so let's talk about Defibs. So here's the great thing about the Fibonacci's. So if you look at something like this, and you know, here's Tesla, and it's like, you know, man, Tesla's falling here, and then it stopped, and then all of a sudden you get this, you know, out of the blue movement. There's no squeeze, and then, you know, it kind of held here, and you know, what's going on here? And if you look at this, it seems like it is completely random. It's like, oh my God, you know, what's going on here? And then all of a sudden, when you apply a few things to it, it looks amazingly planned. Okay, this is like pre-planned moves in Tesla that if you understand the timing and the symmetry involved, you can kind of play the market like a fish. If you look at this here from this peak to this low, it lasted exactly 29 weeks. Okay, if you check here from this high to this low, it lasted exactly 29 weeks. If you look at this high to this low, it lasted 32 weeks. Okay, not exactly 29 weeks, but pretty close. If you look from this high to this low, it lasted 28 weeks. And so what we look for, and or what Carolyn's looking for and stuff like that, is that if you find things like this where you have symmetry involved and a symmetrical move down into Fibonacci cluster support with timing, the odds of getting a bottom there are incredibly high. So to the naked eye, if you're just looking at a chart, it's like, oh my gosh, you know, this is totally out of the blue, what's going on? But if you're looking at the stuff over and over and over again, it just lines up and it just works. I mean, it's you know, it's pretty amazing. And if you drill down here on the daily chart, you can see here that, you know, it's like, wow, from this low to this high, it was exactly 54 bars. From this low to this high, it was exactly 54 bars. Well, the next swing here, and if we get a symmetrical move here over the next 54 bars, guess what? It's going to, around August 16th, could land at $421. And so this is a way to do timing Fibonacci projections into the future based on this work, all right? And again, a lot of times people think about Fibonacci and it's like, okay, here is the swing low and the swing high, and we've got, you know, the 618 and the 50 and the 3, you know, the 382, and that represents about 5% of what Fibonacci is. There's another 95% that's the important stuff, and this is what we're talking about here. So, so here's another chart here of the S&P 500, right? And it's like, all right, last week, the S&Ps were selling off. It's like, oh my gosh, what's going to happen? We're taking out all the key moving averages. You know, there's not a squeeze. You know, what's going to happen here? And again, if you just kind of go and say, all right, well, let's look at the timing. Let's look at the symmetry. Let's look at the Fibonacci's that are lining up here. And for everybody that was following that low is not a mystery. Okay, so here we had Fibonacci cluster support. And in addition, we had what's called fib timing. And that's frankly something that's newer for most people. If you don't understand what fib timing is, if you, again, just kind of going back and looking at saying like, okay, Fibonacci, it's a 382, 50%, and 0.618, and those are the levels you're looking at, and you're thinking of it in terms of potential support, right, or resistance. Well, that also works with time involved in the trade, the 382, 55, you know, 50% retracement, 618 extensions of time. And this is a concept that a lot of people really aren't familiar with, but once you are familiar with it, it opens up a kind of a whole new world in terms of how and when and why these bottoms and tops form. And I'm not talking about these little zigzag, you know, like this. I'm talking about significant bottoms where there's a predictable move made off of that, okay, and as well as some of these topping levels as well. And so that's the kind of stuff that I find interesting with this. So here's another chart. This is crude oil. All right, crude oil recently went from $74 back down to 62, and there's a lot of people were shorting this. And you know, we came down here, we formed a ledge which is bearish, and we came down, we took out the lows, and it looked like it was the end of crude oil. Yet magically the support held and we rallied and we made new highs. Okay, but also I want you to keep something really important in mind here. Not only did we rally and make new highs here, but we stopped almost to a tick at a certain level before rolling over and collapsing today. Okay, now again, if you're just looking at a chart like this, it's like, it kind of seems like, all right, maybe there was some news there or something about Saudi Arabia, or maybe these moves are just random. Okay, well, I'd like to invite you into the idea that these moves aren't necessarily that random at all and can be planned out in advance. This was strong support on crude oil based on a intersection of key Fibonacci levels, which we call clusters. And as it came down and tested that, okay, and also saw some timing from there, we exploded higher into the pre-planned target from this swing high to this swing low. And when you get a move like this, okay? When you get time and price parameters on the daily chart, right? And then you got, you know, especially price on the weekly chart. But what happens like this is when you get close to this first key level like this, and you also get timing up here, now you've got the idea that, okay, not only do we have a high probability of terminating there, okay, but that we're not, you know, that we're not potentially going up any higher here after a big move down like this. We could actually have a pretty steeper than normal retracement. And so again, when it comes down to this stuff is that you go back and you look at the chart and say, oh my gosh, this stuff looks kind of random. But then if you know about this stuff and these levels and these symmetrical moves and the timing are actually laid out for you in advance, and then suddenly it's kind of like having a blueprint for the markets. It's not a mystery anymore, right? And I know that there's been times that, you know, anytime I miss out on a key reversal, it's because I took my eye off of the Fibonacci ball, the Fibonacci symmetry, and the Fibonacci timing, and it's something that, you know, and I've actually asked Carolyn, I'm like, look, if you see me in the room and I'm doing something and I'm ignoring a major timing signal, would you just get your whip out and remind me? And she gladly does that, which is great. And by the way, also on something like this, if you trade oil futures, great. Obviously, this is an incredible move you can take advantage of. You know, a move from $60 to $72 or to $75, that's $15,000 per contract. You know, hey, I got a 10-lot trade, that's 150 grand. But if you don't trade futures, then guess what? The oil stocks also time off of this as well. And so it's a great way to trade. That's funny, Zach. It's a great way to, it's just a great way to trade it. So again, you can trade the futures, you could trade XLE, the ETF, or your favorite oil stock like EOG or FANG. And they don't move exactly with the oil futures, okay? Because sometimes hedge funds are doing pair trades there. They're long crude futures, they're short the oil stocks. But generally, if oil is going up, energy stocks are going to go up too. Yeah, Carolyn, I'm thinking if you could just as I'm in the room, I'll just put an electrode at my neck, kind of like what they used in Thor Ragnarok, and then just push that button. So let's go here and look at Nvidia. Now, again, you'll notice here I've been focusing mostly on daily and weekly charts. So one question that will come up is, oh, great, well, that's awesome, but what about the smaller swings? Does this work for day trades and things like that too? And so, which is a good question, and we'll certainly get to that. Let's see here. Helen, yes, this particular webinar is being recorded, yes. So on this daily chart here again, and you'll see here for me, I mean, this is actually a fairly disastrous move, okay? So you've got a big down candle, a breakaway gap, you know, we're chewing away at support here. And for Nvidia, it actually looks like, man, you know, funds are really bailing out here. And then it holds, right? And we get this $20 move off of that kind of invisible low. But then when we bring up the Fibonacci levels, okay, and you can look at this and just say, all right, well, these levels had been sitting here for a while. They're rock solid. You know, we come down and, you know, it comes down, kind of slams right into it. And from there, it bottoms out and it has a fantastic rally. And especially if you're trading options and leverage and stuff like that too, you know, a $15, $20 move, that's, you know, you're doubling, potentially even tripling your money on call options there. On a move like that, that can be well planned out in advance as well as well timed. So another one that came up here as well is when you see something like this, and there's a really, you know, when there's a really kind of a big break here, and it breaks the 8 and the 21. It's like, man, you know, and there's volume coming in here, but suddenly, kind of out of nowhere, it's like, all right, well, gosh, it's holding here, and what a great place to kind of, you know, buy that as a low and just kind of enjoy a very fast rally. And what's nice about this is that, especially like if you're trading options, you know, the worst thing is if you buy an option here and then here it has a move, but you know, this is over the course of 3 weeks and your premiums eroded so much you don't make any money. Where you make the most money if you're trading options is that you time like a swing low like this, or of course a swing high, right, if you're buying puts. But the rapid price appreciation of the underlying completely overtakes and eradicates any loss of premium decay that you might experience. And so, you know, here again, you're right, the stock goes up, but very, very difficult, if not impossible, to make money long calls in that situation. Whereas in this situation, it's the most ideal setup on the planet for taking advantage of rapid underlying increase, which is going to give you rapid appreciation on the option and completely offset any premium decay. All right, and so that's the stuff that's really fantastic there. So another example here is, so this is PayPal. So we're just talking about that, and if you look at this, huge Fibonacci clusters here, all right, just sitting there, and PayPal slams into these, holds into that upper zone, all right, not only bounces hard, but actually still has an attractive target up here at $89. So very good stuff there. And so what about intraday? So for intraday, so what's interesting about intraday stuff, because sometimes, especially on a stock like Amazon, which we know is extended, it's hard on a daily chart to like, oh my gosh, you know, because a pullback on a daily chart could mean a pullback of $40, right? And it's like, man, nobody wants to hold through a $40 pullback on a stock like that. So the other thing to keep in mind here is that you can drill down to 30-minute charts to look at this work and find, again, support levels. I mean, from here on a 30-minute chart, I mean, Amazon could just puke, you know, right into the end of the day. So how do we know, how do we have the confidence that here it's going to hold? And this is always a bonus when you get in early because of like a fib timing, and then you get a squeeze to kind of add a little bit more juice to the fire there. And that's always, you know, always a positive there. So, and if you look, we were just looking at the 30-minute chart on Amazon. I mean, if you look at this is the daily chart yesterday. It's not, you know, it's not super clear that that's going to hold. Yeah, there's a squeeze, but we're kind of extended from the mean. Is this going to pull back to the 8 or the 21 EMA? But that 30-minute chart is saying, hey, guess what? You've got support here. It's okay. And you've got a trigger. You can kind of take the risk there. And so if you look at this, this is a simple symmetrical pullback. All right. Held support to the tick. And from there, from here had a rally. And then from here, you had $14 just today. So, you know, again, we're not, and that's drilling down to a 30-minute chart. So even the swings that we're seeing on the weekly charts and the daily charts, which are big in nature, they're replicated on smaller levels in, say, a 30-minute chart, but especially on some of these bigger stocks in the indexes can result in very profitable moves. And what's nice is instead of getting chopped up in some of the, you know, up and down kind of crap, you can sit there and be patient and wait for the market to come to these levels, which represent a high probability entry point. So, so here's another one, Netflix. I love Netflix, but if I'm looking at Netflix, here's a daily chart. As you guys know, maybe I like the squeeze. There's no squeeze, so for me, it's like there's no signal. And here we are. We've, you know, come down and we're popping up. And, you know, is this thing going to go down to the 21 or the 34? I don't know. You know, I look at that and just say that's a little too risky. Let me find something with a squeeze. But then if I can go look at Carolyn's work and drill down and say, like, all right, what's going on the 15-minute chart here? And here's this gap up. And it's like, oh, it's coming back down into humongous Fibonacci support with timing. Okay, and we're down here at about 412 bucks. And here we are at 418. Okay, it's like a $5 move as a day trade. And again, as you guys know, if you're trading options, any option that you buy in that situation that's a call into that support and it moves $5, you're gonna have a huge profit in that option, especially because it's a move of one day and you don't have to suffer that overnight premium decay. All right, so super important there. And it's so powerful when you get a move back into support here with timing. Okay, and again, when people think of Fibonacci, they think typically in terms of, oh yeah, isn't that nice? You know, you get the you know, here's the swing low and high, and here's the 382 and the 50 and the 618 retracement, and you buy the pullback to the 50. And again, that's only 5% of what solid fib work represents. Well, let me, so do you guys have any questions on some of these examples just in general? I don't know how many of you are newer to the concept of Fibonacci or kind of the stuff that Carolyn does, but just to want to check in on any questions here. Do you have to use Dynamic Trader to draw this? No, it's obviously it was built for this, but the tools are available also in Thinkorswim and a few other platforms like that. How do we draw them to get the clusters? I've tried. Yeah, so there's definitely specific swing highs and lows that you're looking at for sure. Need to learn how to use the tools for time. Yeah, that's a lot of people just aren't aware of that. They just don't even realize that there's something like that on time. Will FibQueen teach us how to do timing work in this class? Yes, absolutely. Brand new to Carolyn's work. The timing starts seem to be haphazard and not from the larger tops and bottom. Yeah, so what you want to do is, and of course, remember in terms of a setup, when you get resistance and then timing, and then you can use something like an EMA crossover to kind of confirm it. What happens is you can actually get in for very low risk. So let's just say that in this case, it didn't work. So, you can sit here and just say, okay, we've come down here, we're rallying. Let's say, you get a buy trigger when the EMA crosses. Well, what's nice about on something like this is that your risk is small because you're just going to use that low right there as your stop. So if it doesn't work, ding, no harm, no foul. So typically in a situation like this, you're risking 1 to make 4 or 5, which is great. All right, cool, okay. And then what is the class that Carolyn is going to teach us on? So yeah, we can talk about that real quick, and I'll continue answering questions. So again, just to reiterate here for consistency, from talking to thousands of traders, I found that the most common theme in traders getting consistent in their results is very simple. They added fib levels and timing to their trading toolbox. Period. And that's really it. So it's the most consistent thing I've heard about people getting consistent with their results. All right. So I'll sit here, I'm going to answer questions, but I just want to show you what Carolyn's doing here. And Carolyn and I are going to do some live trading tomorrow, but Carolyn recorded already a class yesterday that shows you how to set up all of these levels and timing. And so if you go to simplertrading.com/summer, you'll come to this page, and then you'll see if you're a gold member for just $197, you can get Carolyn's recording of how she sets all this stuff up. Plus, she and I are going to be doing live trading with us tomorrow from 1 to 3 Central. If you're a non-member, it's just $297. And then just kind of as a hack, if you're looking at this as a non-member and you're thinking like, well, I'd like to get that $197 price, but I don't really want to be a member, you can do a $7 trial right here. And look, if you don't want it, just cancel it. It's just, you get 30 days and milk all the information from us that you can. And then after that, you can cancel. If you are a member, just log in and go to this page, and then you'll get that lower price. Now, I saw a lot of questions on how to do this in TOS and stuff like that too. There's a full workshop series on this as well, if you want to consider this. And this would include, in addition to the class that Carolyn and I are doing together, would also include a workshop with Henry, where he's going to cover how to do all this in TOS, all the kind of the nuts and the bolts of drawing the lines and getting the timing and all that kind of stuff, because a lot of people don't know about that. And so you'll see that this is divided into workshop and live trading. So he'll be doing the workshop on the 17th, live trading on the 19th. And then Bruce is also going to do this, where he'll be doing a workshop on the 24th and live trading on the 26th. And then Raghee will also be showing how she uses Fibonacci in her work with a workshop on the 31st and live trading on August 2nd. Yeah, and what Bruce will be doing is income trading with fibs. So Bruce focuses on income, whereas Henry and myself kind of focus more on directional. Bruce will be doing that. And then Raghee will be doing futures. So you got kind of the different things there, and then this is going to be more kind of income there. So just kind of a good thing. And so a good mix there. And so again, if you're a gold member, it's just $5.97. If you're not a gold member, it's $7.97. And of course, if you just want to get the discount, sign up here. It's just $7, and then it's totally fine to cancel your membership after that. If you're like, you know what, I don't want your text alerts. I don't want to see what your newsletters are or anything like that. Totally cool. All right, so. And if you go to that page, also, of course, you can scroll down and you can get a lot more information about that. Yeah, and Carolyn does have a book. If you, it is on Amazon, and it's called The Dukes of Hazzard meets, no, just kidding. It's called Fibonacci. It's Snow and Fire. Yeah, and a lot of the examples in the book, of course, are going to be older and but completely relevant. And of course, the idea of a class here is that you're at the most relevant stuff. So what else do you guys, other examples and things like that to look at? Again, this is kind of a short and sweet kind of a thing. And the main idea here is that, first of all, if you are not aware of Fibonacci, so again, a quick review here, because when I hear people, especially if you're newer and you're talking about Fibonacci, all people think about is, okay, that's that, here's a high and here's a low, and you got a 382, 0.50, and 618 retracement, if you know anything about Fib, and you think like, okay, that's all it is. And really this constitutes about 5% of what Fibonacci is. The other components are timing, symmetry, and clusters. And that's the 95% that you got to know if you want that additional edge that comes from this work. Yeah, triggers will be discussed at length. There are, of course, different triggers. The main ones that we all have been using that seem to work fairly consistency are some, just some moving average crossovers, as well as some candlestick patterns. There's different things you could use with momentum as well, but certainly cover that as well. Yeah, and we do, and Carolyn's kind of daily review of stuff is always on the stock index futures, because the stock index futures are obviously used by futures traders, but for stock traders, the first thing you always want to check is the indexes too. And then from there, it's kind of going down to the key trading stocks. Very good, very good. Yeah, and this one right here, so again, just to review, so this one right here, this includes Carolyn's class plus the live trading that Carolyn and I are going to do tomorrow. And then this slightly bigger package, kind of a professional package, includes this class plus 3 additional classes. So you get essentially, you're buying, you're buying 3 and you're getting a free class. So it's a great deal. Yeah, so if you're signed up for this, you will get a link for the live trading in your email. Mark, so I attended Carolyn's 710 webinar on her work, but since I'm a newbie, I was totally lost. What should I do? Definitely, I would plan on watching that 2 to 3 times. Pause it, practice the work. It's one of those things that you do kind of need to go through and just kind of practice it. And the easiest way to practice it is just to kind of watch her do it a couple of times. And what I would do is you watch her do it, but then you also physically do it on whatever platform you're doing, even if it's not quite the same, because then it gets you in the habit of where to draw the swing high to swing low. Okay? Okay, good question, May. So, John, can we do Carolyn's work without the many extra indicators on your site? And the answer is absolutely yes. So, the Carolyn's work is standalone. I personally use it in conjunction with some of the tools like the squeeze and stuff like that too. But with her work and some moving average crossovers, you're good to go. And what I always say for additional indicators is that the additional indicators are for different styles of trading. Everybody kind of needs to find that style of trading that best fits their personality. And the thing I love about this kind of work is that it forces discipline. Okay, instead of just taking random trades for fun, or just it's like chasing and FOMO. You actually have your levels sitting there, and your only job is to wait for the market to come to those levels. Okay, so just your biggest thing with this is that you just got to be patient. But it just eradicates so many bad habits that traders naturally develop. Yeah, no, Stephen is just saying, like, John, I've got Carolyn's book, and I've done our work, and I would not ever think of doing a class or doing a trade without our work. And yeah, that's a good summary right there. John and Carolyn, do we need more than one computer screen to do this work? No, you don't. I do my trading on two main computers. One has 6 monitors, and I have a 6-monitor computer at my office and at the house. And then, of course, when I'm traveling, I have a 1-monitor laptop. And what's interesting is, although when I'm traveling, I certainly can miss my 6 monitors, it's refreshing just to be on one monitor and just like, I gotta simplify it. It's like, all right, here's my chart, I got my squeeze, I got my fibs, and it just makes it very simple. When I've got multiple monitors, typically what I'm doing is monitoring a lot of intraday stuff. What's crude doing, what are bonds doing? Whereas with one monitor, you're just honing in on your work, and you don't really need to know what else is going on. Yeah, and for people that work full time, so I spent the first 8 years of my life, well, 6 years of my post-college life, working a full-time job. It was very demanding. And so all the trading I did off of that was on daily and weekly charts with Fibonacci levels. So you don't have to watch the markets. You just know your levels in advance. You place your limit orders and you go to work. And then you come home and like, did I get filled? Did I not get filled? What happened? So it's actually one of the easiest ways to trade if you are working a full-time job. Do I ever take a trade without the squeeze? So the only trade I take without the squeeze are setups like this where you have symmetry, Fibonacci clusters, and timing. And what's great about that is, and sometimes when the markets are volatile, you don't get squeezes. If we get the whole summer series, can and can't attend real time, will the live trading workshop be recorded and sent to us? Colin, absolutely. So there is an assumption that not everybody's going to be able to attend it live. So although we do the classes live, I actually much prefer doing the classes live. I think I like interacting with people and answering questions, but we always record it for people who cannot attend. And the great thing about the recording, just when you log in, you'll see the recording there. You can pause it and go back and forth and all that kind of stuff too. Plus, since we are answering questions from the live audience, guess what? A lot of times, they may be questions you would have had anyway. And of course, if you have questions that weren't answered, you can always email us after the fact at support@simplertrading.com. And oh, a good question. So Cvan P, if I'm saying that right. So when you're placing a limit order, how do you know what price the option will be? So there's a couple tricks for this. I think Henry will cover this in more detail. But there's in option pricing, you can get the theoretical price. And so if let's see, if JP Morgan is trading at 106, you can get the theoretical price of the option if JP Morgan drops to 103. And so, the one, like the $100 option here might be $8, but the theoretical price here, if it drops $3, is going to be whatever the price is, but like $5.70, and then you just place your limit order for that. So you certainly want to keep that in mind, because I'm a big fan of buying options using limit orders like that. Just kind of good till cancel. And because either it's going to come down and get your price, or there'll be enough premium erosion where you can get your price. But I'm certainly a huge fan of that. Rick S is just saying, for what it's worth, I took the class last night. I put fibs on the drop in the YM from yesterday's high to this morning's low, and set a closing order 1 tick below the 50% fib. YM went 1 tick over the fib line and reversed. My closing order filled for a nice profit. Thank you. Rick, that's awesome. That is exactly why I love Fibonacci's, is that you can pre-plan trades in advance at high probability pockets of, it's not pockets of liquidity, it's just pockets of, I always think of Fibonacci as where psychologically, emotionally people have run out of juice, and then whatever supply is being dumped on the market is running out, and the Fibonacci just times that perfectly. Would you say that the algos are tuned to the Fibonacci levels as well? They definitely do use them, and what's interesting is that fib levels have worked consistently before algos and after algos. I will say though that I do work with a couple of firms that write a lot of algorithms, and none of them are doing this. So they just use the basic 382, 618, and just kind of test those levels. They're not really aware. So the algos always have to do something that can be computed automatically, and this kind of stuff it just can't, you can't do that. And so again, it's kind of an edge in using this, because you're kind of a little bit outside of the school box and the sandbox of where the algos are playing. Yeah, so the daily charts are, they're only updated once in a while because they don't require a lot of updates. But of course, yeah, intraday charts, that's a constant swinging back and forth. Yeah, yay, humans win. Yeah, there's definitely pockets. Like, I would never scalp a 1 minute chart. You're fighting against the algos there. But there are certainly pockets that retail traders can take advantage of that are outside of the algos and are too small for the hedge funds to do. I mean, hedge funds, they need days and days to get into positions and days to get out, whereas, we all can just right click and get in and get out. Manny, the only one I know of is just these two packages here. If you're just doing two of them, I would just call or email support@simplertrading.com, and I'm sure they can help you out. Can you use fibs on tick charts? Yes, you absolutely can. And C-Van is just saying, like, yeah, I love the class yesterday and love your service. It's changing my life. Look, and that's what we're here for. I mean, this is not, we do this. We all like trading ourselves, but part of at least why I do this, and a lot of us do this, is that, hey, you know what? It took me 8 years of pain and suffering to kind of get into a trading groove, and if we can reduce that suffering period for other people, then it's a win. Because we're doing what we love, and helping other people. I mean, it's kind of a cool thing, and it's a great, it's one of those things where it's just like, look, the stuff, it'd be much easier to just trade, but if you can do it and make another life out of it, and add some value, then that's a win. Rhonda is saying he really enjoyed the class last evening. Yeah, it was a great class. I was in a trade before becoming a member of FibQueen service, and she had done fib work on the stock that showed resistance clusters that I would never have seen. Thanks, everyone, and have a good evening. That's awesome. Yeah, as Carolyn says, she's a Fibonacci fanatic, though some call me a Fibonacci freak. I like fanatic. How much capital do you commit to your average trade? That's a longer conversation, but the short version is that you know, I generally like to try to, you know, if I'm looking at risk profiles and things like that, with options, you actually don't need to risk a lot of capital to make decent returns. But the most I would ever put into one trade, like this is fully maxing out a position where there's maybe timing, Fibonacci levels, I got buy triggers, is put 20% of my account at risk. Now that doesn't mean that does not mean that I'm willing to lose 20% on that. It just means that I've committed, if I've got a $100,000 account, I'll buy $20,000 of the options. And then, you know, of that, just say like, okay, you know, if I've dropped 4 or 5 grand, then get out. And that's an aggressive kind of a stance. And she does, yeah. Yeah, and you'll see here that the way, here I can clear some of this up here. But the way to see that this is structured is that you've got 2 options. So the first one here is just that this will get you the recording that Carolyn did yesterday. This is the class that everybody keeps raving about in here that took it last night. And in addition to that recording, you can join us tomorrow from 1 to 3, where myself and Carolyn will be live trading using this work, looking at futures and stocks. So we'll do some day trades, obviously, and then potentially set up some swing trades as well. Now, in addition to this, okay, if you would like to also see how Henry and Bruce and Raghee use this work, Henry's going to talk a lot about how to use these tools on TOS as well. Bruce is going to be talking about how to use these to create income, and Raghee is going to be talking about futures. But you can see they've each got 2 workshops. So you've got the workshop and the live trading. You've got the workshop and the live trading, and the workshop and the live trading. So it's really fantastic just in terms of getting a well-rounded education on how different traders use Carolyn's work there. Guys, I'm a fib newbie. I want to learn this. So, Mark, I would get Carolyn's book. If you, and it sounds like you may have signed up for the class already, and then just be sure to, you know, take her class. And if it's over your head the first time, that's fine. That's normal. You know, watch a couple times, pause it, take notes. The key though is you got to start drawing them yourself. So if you're watching Carolyn, you know, drawing on a chart, but then you're not going to a chart and doing it yourself, it's going to take longer for it to sink in. So do the work concurrently with her. The way that you learn to do this is kinesthetic, okay? There's 3 types of learning. There's visual, auditory, and kinesthetic. The only way you're going to learn this is kinesthetically, which means you do the work. So when Carolyn draws the fibs on her chart, go on your chart and draw the fibs, because it's going to start to sink in. And what I mean by kinesthetic is you get your hands dirty and your neurons start to fire and it starts to become part of what you're doing, and you're going to remember it. If you just watch, you know, you're not going to remember it. So it's one of the things, though, it's kind of interesting. It's like, you know, there's some things in life you can learn by reading a book, and other things you learn by doing it. And this is, you know, fibs and all that is certainly one of those. Yeah, osmosis. Yeah, and remember, you know, Carolyn's been doing this since 1988. And what's great about this is that, you know, she's taken this to an entirely new level that you probably have never seen before. But what'll happen is that when you see it, the first time you see it, you're like, oh my God, symmetry. And she does that so fast. How does she get that cluster? What's this timing thing? But if you pause it and go back and then just recreate what she did, right? Because, you know, you're not going to be able to do it as fast as Carolyn. That's fine. But you'll understand it. You'll be able to do it yourself too. And then obviously Carolyn's got research on this too. And I frankly don't do a lot of this myself because I can just look at Carolyn's work. Yeah, osmosis. Any comments on using fib for continuations? Let's say a long flat base in time followed by a breakout in price. Yeah, so I'm a huge fan of projections and extensions. So, you know, I was talking earlier about everybody thinks of Fibonacci as, you know, here's a swing high and here's a swing low, and you got the 382, you know, 0.50 and 618, right? So that's kind of the normal way that if people have any inkling of Fibonacci, is, you know, that's kind of how they think of it, swing high, swing low. But then if you break through this, you get the 1.272 extension and the 1.618 extension, and those become our favorite targets as well. JD, that's a great, yeah, put up a non-square corner of crown molding. The first time you will struggle, after that it'll get better, and you'll learn from your failures. I would say, like, the first time you get in an argument with your wife, try to win, and then the next time, just forget about that and just nod and say yes, and it gets a lot easier. All right, guys. Well, I'll see if there's any other questions here, but I think that's about it. So, again, this is just, I think it's a fantastic opportunity. Again, everybody has different goals in trading. And if your goal is consistency, if you're struggling with consistency, in most people I've talked with, this is the answer. Adding this work, understanding this work is the answer to that question. So I'm always happy to share it with you because I know that the people who go through this and learn it and use it, their lives can turn around. And you saw on the charts where stocks would stop like on a dime and reverse. And if you had the Fibonacci clusters and the timing, you would have expected that. Well, most people, and certainly the algos, are not using this stuff. All right. And so, if you use this stuff, not only do you get an edge, but it automatically invokes discipline in terms of patience and waiting for levels and not wondering what to do. And it's just going to make your trading, honestly, more boring, but more profitable and more consistent, which at the end of the day, do you want excitement or do you want cash? Or do you want both? But that's a whole different conversation. But if you're, if you want to be right or if you want to make money, focusing on the money is a lot easier if you have the right rules in place. Does the 197 package include the live trading tomorrow? It does, yes, absolutely. Sai, that's a good way to look at it. All right. All right, guys. Well, that's what we got. So again, if you just go to simpletrading.com/summer, and then there's a whole page there I can show you, real quick too. But it'll talk about it in more detail if you have questions. So, but some of the stuff and things like that there, and that's right. There we go. So there we go. I'm just kind of grabbing that page there. But yeah, it'll go down. There's bullet points. It talks about it in more detail and things like that. But the main thing you just need to know is that, this class that Carolyn did was yesterday, so you'll get the recording of it. And then, with this, you get the live trading with Carolyn and I tomorrow. And then if you want an additional 3 packages, so what this is this package plus all the work from Henry and how he uses it, Bruce and how he uses it, and Raghee how she uses it. It's a great package, and it's a summer series. By the end of this, you'll be an expert in this stuff and know how to use it in a lot of different ways. All right. And now let me see if I can find, there it is. Cool, guys. Well, I'll leave this page up here. Again, if you have any questions, of course, you can also just email us at support@simpletrading.com and give us a call if you have any questions. But, again, this is an easy kind of a slam dunk tool to add to your toolbox. I'm super excited for people that are going to take this step. Again, the impact we always see with something like this, even though it's it's not the usual kind of a thing. It's not like, oh, it's a squeeze. No, it's a whole system. It just, the impact that we see from it is great. And so, to me, it's kind of a no-brainer. And so I hope you guys take advantage of it. All right, guys. All right, have a good evening. I'll leave the page up, and then looking forward to seeing you guys tomorrow.